Good afternoon, everybody, and welcome back to another StockTwits Q&A session. I'm Brittany Umar. I'm going to be joined by Scott Redler to answer your questions live in just a minute. But before we bring him on, we're going to show you a quick video. It's going to give you a sneak peek into Scott's trading world. Check this out. We'll be right back.
I'm in a little MGM and I'm still in OIH. I bought it this morning at 107.50.
Apple's good.
You don't buy in the first 5 minutes of the day.
I live in Jersey City. I was born in Long Island, went to school at SUNY Albany. As a firm, we are 5 partners and I'm one of them. I am the strategist that puts the game plan together for about 400 traders. I kind of command that army. What's going to make us money with that is on a day like today, if it's up or down 3 handles, that's when you see where other money is really getting put to work, and that's where the action is. You held 1,600 the whole time?
I got 1,000.
See, that's a growing experience for you, brother. All of the traders trade our money, so they have to be right. They have to say, okay, I think Apple's going from 260 to 265, and if they're right, they make money. It's a good setup. Stick with the win. Okay. It's the right trade. Don't watch it so close. Relax.
Scott's coming on in a minute, so we're going to listen to Scott.
Scott, technicals first. Market looks good. Volume seems a little light. What do you see?
Right now, the market's behaving very well technically.
Let's talk to this guy. Now, here's a guy, Scott Redler, who does nothing but technical analysis, but puts his money where his mouth is because he's got a firm and his partners put their money in every day and trade on technical analysis.
I'm not looking for a home run. It's not a get-rich-quick scheme. If I'm able to pick the direction of the market, I could book a winning trade and I could provide for my family.
Where's the breakout? That is the next evolution.
Good afternoon and welcome to Thursday's StockTwits Q&A Forum. I'm joined here with, obviously you know already, my brilliant, beautiful co-host, and Brittany also, and Brittany, and we're going to just start with the questions because they're just rolling in, and I want to get you as much information as possible. So, my good sport, Brittany.
Yeah, this guy thinks he can get away with anything today because his birthday is tomorrow. Let's get right into things. With all the bad news right now and the market closing off its lows, what do you think of the market composure?
It was interesting this morning. You know, I woke up and yesterday we saw pre-announcements from 3 different companies. Last night you had PMIs around the world showing growth slowing, and then you also had UBS downgrading 3 of the banks. So right away I'm like, oh my goodness, I have 11 positions, 1 hedge. Today is going to be a tough day. Today's going to be one of those days where I've been riding this rally, you know, with multiple positions, trying to hold since August even, you know, the last part of this rally. But then all of a sudden, you know, I went on Bloomberg today and I talked levels and I said, let's see if the composure changes. Let's see if the 8-day moving average, which has been holding this market or has been a great roadmap, let's see if it stays intact. And if you take a look at the chart here, you know, first taking a bit of a macro look of the SPX, you'll see, you know, all these different chart patterns we've spoken about. But, you know, the outside day down here, you know, October about a year ago, and then the wedge type pattern after this big move that wound up igniting to a nice first quarter move, which a lot of us had multiple positions. Then we had that corrective pattern. Remember we talked about the head and shoulders top, the left shoulder, the head, the right shoulder. It broke, it measured a move down to almost where we bottomed on June 4th. And then since then, we've had a nice methodical move to the upside. The last pattern here, the cup and handle pattern that we've listed so many times. And now you take a closer look. You take a closer look to where we are if you're trading the intermediate trends. After nice consolidation here, remember this was when the ECB came out with their news and powerful. Then we hung out for 4 days or so, and this was your QE3 igniting bar. And then we were overbought. Remember 1474, I was tweeting about my oscillator plus 60, a time for potentially a cute short, maybe short some of the banks, etc. And now fast forward, this is where we are today. Look what we held. We held the 8-day moving average. Same way we held it here. Same way we held it here, but we actually consolidated a little bit longer this time to let the 21-day catch up, where that's down here. So at this particular point, with everything that's out there, this market is holding in very, very well, and it's giving bulls a lot of reasons to stay with their positions. You know, maybe you trade around it, and recently I would say the last 4 or 5 days have been a little bit tough. You've had to buy them in the hole, and if you add to them, you ruin your prices. So it's a little bit of a momentum switch where there was a ton of momentum where you could buy high and sell higher and high five, and and people said, oh, anyone can make money in this market, which is far from the truth. This time, it's you have to be very tactical. You have to manage your positions. Stock selection matters. It definitely matters, and I think we have a lot of questions coming in about particular stocks. So let's go to the next one.
Yeah, lots of questions about particular stocks today, especially Apple. We have one from Exhale saying, do you think Apple will see 750 before 2013?
Do I think Apple will see 750? Well, I think every price target out there by every wirehouse now is about 800 to 1,000. So the question is it, people are saying all these upgrades and all these higher targets, does that mean it should put in the top? I don't think so. I think the iPhone 5 is going to be like what Cabbage Patch Kids were to kids way back when. This is going to be for adults and even teenagers. Maybe even some 10-year-olds going to have this phone. But anyway, the stock itself has been unbelievable. Tactically, as a macro hold, people are making a lot of money. As an intermediate trade, we've been getting swing trades that could last for weeks. That the last one being the product announcement on Wednesday of last week. You could have bought it around 670 and saw 30 points pretty easily up above 700. And now with quad witching, it's a little bit, a little bit testy here. Yesterday, I talked about them shaking the tree a little bit, because everyone was probably buying some 710s and 720s, so the dealers probably wanted to constrict it. Then today, they made Apple seem weak. We talked about 694 to 696 as an area to potentially buy it. If you go to the chart of Apple, this was from the morning call. Talked about it potentially breaking this little short-term ascending channel, and then holding support here, which was the 8-day moving average. Didn't even reach there, and then it closed off the low. So I would think guys that are holding it from this day, no reason really to get out of it. You could have sold a little bit into strength. We talked about that, and then today you had a little bit of a dip buy, and now at this particular point, if you want to measure it so closely here. This is your new point of reference, right? 693.62. Maybe it needs to go a little bit sideways, but then I do think once the numbers start coming back from the weekend next week, or we see sales figures, we're going to continue. And at this particular point, Apple, has been a great trade on every different time frame. This was after earnings. You had your trade here. Here was your continuation. Then you have all these little micro patterns. So it all depends what time frame you're looking at. As a macro investor, I think you hold it. I do think there is a high probability that you do see 750. I don't know if it happens before Christmas, but a lot of people didn't think Google would be at 730 today, when it was 120 points lower into last quarter's earnings.
So if you're telling macro investors then to hold, what would you tell Tommy, who says he has Apple shares in his IRA and in his trading account, and he says he plans to sell in his trading account before earnings? Should he hold in his IRA?
Well, it all depends. Like last quarter, my note, I said I'm not going to have in-the-money calls into this quarter. And you saved yourself 30 or 40 points with that down move. A lot of people didn't take it into earnings, and then all of a sudden you had that move lower. And then if you sold it beforehand and felt like a hero, but you didn't get your entry back, it's 100-some points higher, and you probably don't feel so good. Even though if you book profits, you book profits. So if you're holding it in your IRA and you plan to, hold it for a long period of time, if you sell it pre-earnings, you just got to make sure that you look for a swing trade type of buyable strategy to get back in with the plan. I would say I think you're fine. I think you hold through that. This move in Apple's far from over. You still have them potentially getting added to the Dow. I think that there could be a split down the road. I still think there's a lot to like iPad mini, Christmas season. So even if this quarter isn't great because they just rolled out the iPhone 5, I think that the quarter thereafter is going to be, blockbuster. So I think if it's in your IRA, you hold it. If you're an intermediate trader like myself, you maneuver your position size and just keep moving and grooving. But I do think this move in Apple's not over.
Lots of questions also about Facebook. Chorik, JX, Exhale, they're all asking questions about Facebook. JX wanted to know your thoughts on Facebook after today's action, and Exhale asks specifically if you exited Facebook on the week close.
I did not exit Facebook on the week close, and I would have liked it to close a little bit stronger, but Facebook has so many different players in there that are maneuvering the stock. On an intraday basis, that was kind of gross how I tried to break out and failed, and as an active trader, a lot of guys might have got out and got short. For me, I'm trying to use it a little bit more of a swing approach, and if you do look at the daily chart, I don't see anything broken yet. Go to the chart here. This was, the low. This was the first entry that we talked about around 1850 when it gapped up on the news and didn't go backwards or held it. Then you had this break of this minor flag to the upside around 1940-ish. Then you had the gap up, and since then, it hasn't been so easy, but it's been pretty choppy. But if you look at the chart right here, overall, all it did is give back a little bit more than you would have liked, but not even half of yesterday. And that's after you saw a really big move all the way from the lows here. So I would say tomorrow, if it breaks the 50-day and breaks yesterday's low, then I would think that potentially I would get out of it and revisit. But I'm still holding it. I have a little less. I have probably the same as I had last night coming in. But there was also opportunities intraday today. Intraday, you could have bought it and made some decent money. This was the open. It was choppy. It was holding up most of the day. Then you got your day trade right here. This is when it exploded out of this wedge type pattern. Went positive. You could have salvaged your trade into the gap fill. But if you're added on the momentum, thinking it's going to continue, this definitely hurts you. And you never want to see like a breakout failure like that. And then I will say even some active guys probably got a little short when this broke because look what happened thereafter. Pow. So it all depends on your time frame. As an active trader, probably was a good short for you today. As a swing trader, it gave you a little bit of a way out if you bought in the hole and you could have salvaged it. And then at the end of the day, it definitely was more bearish than bullish on a short-term level. Considering, look at this pull. This is a ABC bear flag where here's your breakout failure. Couldn't take back even a third of that, and then there's your continuation. But overall, again, on the daily, doesn't look so bad. Here's your little uptrend that's been in place since this gap up. So a break below 2160-ish, and then I think you have to revisit it and let it figure out and give you a new entry. And it's come a long way, and just keep measuring it.
All right, Marketpicker says, hey Scott, happy 40th. He says, I know you've been pounding the table with the select retailers like Walmart, Target, Costco. What are your thoughts on Gap?
Gap is something I haven't traded, but it doesn't mean that he can't. And I think Vicky's had it in off the charts once or twice. We've talked about it. Looking at the chart for Gap, GPS looking really strong still. This is actually a really good swing trade type strategy too, where it gapped up, held half, didn't even test the gap, and your entry was right when it crossed the high of that day. And since then, it's been pretty choppy, but it's hugging the 8-day. It's near the highs. I would like to see it get going. I guess I might need to see some back to school data, and see if people are going there or to their stores versus others. The high here is 36.23. I think above 36, you can get a continuation move at this particular point. It's market's just pulled in, and look where it is near the highs here. I wouldn't want to be short this thing, but and I also think there's a trade here for it to expand. And if you've been holding it, it's hugging the 8-day, touched the 21. A lot to like here in Gap.
All right, Trader TLT says, Red Dog, what about GMCR? After a short squeeze to 33, it's fallen faster than Usain Bolt. Think it'll hold the 21-day moving average?
Here's the thing. People actually on the feed there like, why? What does a trade mean when it's cute? Meaning a lot of times I'll be like, oh, I'm gonna go after a cute short. And the reason why it's a cute short now is because we're in an uptrending market. So you have positions and the big money's been made on the long side, and then when things get extended like it did last Friday, you look for a cute short, and you can make some cash flow if you're surgical. So as far as GMCR, which is a broken stock, which is heavily shorted, all those longs in there are cute. All they are is tactical squeezes based on where they are. And I know Sperling had a pretty good trade yesterday, so did I. And thank goodness, I didn't have it or didn't have a lot of size in the morning. Here's your cute entry, right? This was a nice entry. It cleared this area tactically above 2670, gave you 2 days of nice movement. And then what did it try and do? It tried to flag, right? Looked okay, but then once it broke this level, that's basically you're out. And now at this point, it's at the 21-day. It's not as important because this is not a leading stock and it's just started following this trend. But last time it did hold the 21 days, so I could say at this point I wouldn't be long this, but it's worth looking at here. Maybe tomorrow if it broke below today's low and put a tail in and created a little bit of a red dog reversal type of strategy there, I would look for a tactical play. But I think at this point, you had the gap up, never filled the gap, showed some pent up energy here, went sideways. This was your tactical long as it went near the gap here, and now I think it's kind of failing and it's not as easy.
Well, perfect follow-up then to that is Marketpicker says if a stock pushes above highs and fails, but is still green for the day, will you look to put on a cute short, or does it have to be negative?
Being negative is better, and it's not a perfect world, but at least you have a point of reference. So if a stock tries to break out and pulls back in, then they squeeze shorts, they induce new longs, and then it reverses. It shows you sellers got in control. But if it doesn't go red, they don't have complete control. It could just be a rest. And we've talked about sometimes how some stocks are not longs, but it doesn't mean that they're shorts. If you look at a chart of like the XLF, this one didn't quite do it here. Remember how it pushed up, closed near the lows, but didn't trade below the previous day's high, but it still gave you a topping type pattern here or strategy here as it had a big move. And then you look at also the spiders that day too. Spiders didn't quite close red, but we were at plus 60 on the oscillator, and it came off the highs, so at least you could have been short versus the high of the day, which was 148.11 there, and you could have tactically made a little bit of money, not a lot of money. Still the money's on the long side, but so it's not a perfect type of environment, but what you'd like to do is you'd like to see it, squeeze everyone out, get some chasers, close really red, and then see a momentum switch. So, and at least when the momentum switches, you also have a new level to trade against from a swing standpoint.
Okay, and we just talked Green Mountain Coffee, so let's talk Dunkin Donuts. Matt Mann says, Scott, what's your take on Dunkin? This is one of your stock trades of the year, and thus far the stock has underperformed. Any thoughts?
Yes, I came out with, I think, 4 potential IPOs that could have macro type of performance. That you could buy it, you could hold it, you could put it in the drawer. That's more than just a trade. And during that time period, if you look at it, there was a great setup through 31. That's why I always talk about time frame. So you look here, this is when we really started getting very interested in this stock, okay? Because look at this nice pattern. You had your cup, you had your handle, was ready for a breakout, and then you had your breakout, okay? And then it came back, retested, acted well, and then methodically went up and gave you another trade. So this was nice, okay? So it was holding in well for an intermediate guy. It really gave you no reason to get out of it, okay? And then what did it do here? It did a little bit of a breakout failure, okay? Which was something I don't like when it breaks out, comes back in, and then really from an intermediate, you haven't heard me really talking about it ever since it broke this level, ever since it broke 33-ish. I'm like, if you're not committed to this long term, this is your spot to get out. And since then, it hasn't really acted well until lately. It's starting to, I'd say, get tighter again. It's still okay. At this point, the moving averages have caught up. For me, I'm actually watching it as a trade. Some guys caught the trade right here. It traded through, held, I would say, above this 31. It could start going again. Overall, if you look at the monthly chart, these things take some time. It doesn't look as set up as it did then, but it's still holding a little bit higher. It's still acting well, but at this point on the monthly, the wide range bar is still in control because we didn't even take back half of it yet. So at this point, it looks okay, and I think it still needs some time to repair. And if you put it in your drawer for a long-term macro trade, I think that that's what you're committed to, and you have to let the company work out. And I think it does. The other ones that we had there were LinkedIn that made new highs, Coors that's been unbelievable, and those were, I think, the 3 from a new issue standpoint that were just more than a trade. But when you put those type of projections out, you measure it. Same way, Google was my high beta tech stock trade of the year, and in the first 2 quarters, it lagged, and everyone was trying to beat me up, and then finally, technically, it got back together again after last quarter, and now it's at highs, looking to take out the historic highs. So you have to know what you're looking to get out of these things, and just measure your share size based on the intermediate complexion. So if you had like tier 2 or tier 3 in Dunkin when it was acting well, maybe when it broke that level, if you were longer term committed to it, you get to tier 1 and you sit in it until you start seeing it acting better, and it's starting to act better. So maybe there will be some extra cash flow to be made. Okay, and Sunny says, my question is, what do you think about Lulu? Lulu had quite a comeback. Let's take a look at the chart real quickly. This too shows you how timing these things, it all depends. What's your time frame and what are you looking to get out of it? And if you look right here, it broke out and failed, and that's when the trend started to change. And then you had the gap down, and it never filled that gap after that time period, which gave you a lower move. And then all of a sudden, what'd you have here? A tactical red dog reversal. Down here, it did not look good. if you're a long-term macro investor, you probably say, oh my goodness, what am I going through here? And, you might have sold it, and that's fine. But as an intermediate term trader, here's your sell signal, and then this was your buy signal. This is a perfect red dog reversal, actually. So a lot of people ask me about that strategy. That's when stock comes down from, what is this, as high as 79 and comes all the way below 55. It pushes through a big support, comes back above it. All of a sudden, that's your reversal strategy. So you're a buyer here at 53.19 with a stop at the low of the day, a perfect swing trade opportunity that really wound up being measured all the way up until earnings. And now, you look at it, it's been hugging the 8-day, it's flagging again, and it does seem like there's commitment to this move. If it wasn't, it would have given back a lot more than just, the top third of this range. So at this point, tier 1's fine. At some point, it can get some momentum here. I would be looking to buy it, and guys in my office are watching it every day. Above 79, it can get going again. But it had a big move, and this just shows you how, trends on an intermediate basis change. And depending on your time frame, you could make money and maneuver in both ways. This way, short, and then right here, long. And now, actually looking into it this way, it stalled right at these highs. And the next move, if it can continue to go sideways and let some of these moving averages catch up, should be pretty strong. And it looks more to the upside than the downside.
And now let's talk mollycorp, ticker MCP. Mab says, Scott, I bought into MCP and still holding. Does it still look good here?
It all depends on your time frame. For me, this was another cute type short. This was a beaten up stock. This was one of my, treasures for trash, type of trade. And typically with that trade, I ride them for like 1 to 3 days. Sometimes it lasts a little bit longer. So if you look here at MCP, I don't own it right now. Really, what got me interested here from this lower level was the fact that, it made a low here, gapped up, okay, changed complexion, never even filled it. It gave you 2 days. Sorry, hold on. So this right here shows you pent up momentum, shorts trapped. Then you had some commitment right here. Commitment to this 2-day move. So this is when I started to get a little bit, more committed to this. So I think I bought it on this day and said I'm going to give it to, as long as it continues to act well. And I didn't have a lot of it. That's why I was able to hold through this chop mess. Plus Sperling has really, is committed to it. He likes it a lot more than I do. And I figured it could continue. Then finally, had a nice wide range bar right here, and I think I sold into just like right into here, into this moving average. Actually, no, I held it on this day. I was like, you know what? From here to here, it filled most of the gap. I do think it's not a full. It's not it's not compelling right now. It's if you had tier 1 here and added to tier 2 there. You hopefully got back to tier 1, and I would think it's just a tier 1. It's nothing more than that. And if you want to draw a little trend line here, it's still in it. So as long as it still follows it, maybe you can get more. If it were to, I would say if it were to break this level here, I would just get out of the way. And this was a cute counter trend trade to what was a very, very sharp decline. So that's all you were kind of looking for. So you want to make sure of it.
All right, we're going to take a quick break. We'll be right back.
Hi, I'm Scott Redler, Chief Strategic Officer for T3 Live, and I would like to invite you to join us on October 6th and 7th in New York City for our first annual T3 Live Active Trader Super Conference. The 2-day event will focus on what we believe to be the 5 keys to being a successful trader. We will teach you the strategies, tactics, and mindset we take to the market every single day, and you will leave the Super Conference with a personal step-by-step success blueprint. Visit T3Live.com and click on the Education tab on the top of the page and watch preview videos of this event. Seats will fill up quickly, so be sure to reserve yours today. My colleagues and I look forward to meeting you. Have a great day.
We're back and we're answering your questions live. Scott, let's talk about your new swing trader course. We have a question from V The Rock saying, hey Red Dog, what can you tell me about your new swing trader course scheduled to launch on Monday? I'm in it and excited about it.
That's a very good question, and we're very excited about it and excited to have you. So I'm going to go into it a little bit of what this course is. Just so you know, like a lot of people, tomorrow I turn 40, okay, not today, tomorrow. And I've been in the stock market now, I think, since I graduated college. So I've probably been in the market now for 15 years. And through those 15 years, I've witnessed so many different types of markets. I was there for the parabolic move to NASDAQ 5,000, and then the move from 5,000 down to 1,000, and then and then September 11th, and then the rally we had after we invaded Iraq, and then you guys probably got to know me a little bit more in the media during the financial meltdown, blah blah blah. So P.S. I have a lot of experience, and there are a lot of people out there that always have a lot of questions, and a lot of people out there that want to approach the market but can't do it as actively as we all do it. So what I wanted to do is I wanted to come up with a course for a swing trade basis. So we have the active course and the momentum course for guys that are actually trading all day long and can get in and get out. The swing trading course is a little bit different. It's my baby. It has my personality in it, and it really is geared to hold things for a bit longer, to stay involved, to try and get multi-week trades out of situations that could add cash flow to your existing job, but also have you maneuver the ranges of the markets. I always show you the chart of the S&P, and you've seen 5 major patterns in the last year, and each one of those were maneuverable. I talked about each one of them on TV, so if I had enough time to talk about them on TV beforehand, you had enough time as a swing trader to maneuver your size of your overall equities and also find great trades to provide alpha within there. So within this course, what we try and do is outline the strategies that we use in order to identify swing trades. Okay, and they happen in all different ways. Right now, there's about 6.5 hours of actual footage that you could watch over and over and over again until you get it. We have a book manual that goes with it. And then I'm also going to be mentoring, not on the VTF, during the day, 4 times a month for 45 minutes from 4:15 to 5 every Tuesday with the swing trading room, and go over potential ideas that people identify, because sometimes your ideas are just as good as mine. And we're going to talk about what we like, what's been working. I'll answer questions and really just move forward with this course. And I think that at this particular point, if you're watching this show, or you look at the morning call and you're trying to educate yourself, I think that this course will add a ton of value. And my name's on it. I don't like to put my name on a lot of things, because we did a lot of work, a lot of research on what to put out there for you guys that could add value. So as far as today's concerned, all right, Monday we roll out the swing trading course. Tomorrow is my birthday, and everyone's like, what can I get you for your birthday? You know what? I'm going to give you something, as a motivator for my birthday for you, that if you want to sign up for this swing trading course until Sunday night, it's basically half price. You can go to t3live.com, and there's an icon that'll show you the swing trader course. You could press it. I believe we're offering it for $897, and after that, on Monday, it goes back to $2,000. I do think you break it down hour by hour, education-wise, you can get a few trades out of this thing that will pay for itself within almost the first week, but hypothetically. But I know just from the reaction we get from everyone on the VTF, this now once you're there, everyone realizes how powerful it could be. And I think the swing trading course goes over so many concepts that I use, that I apply, that will help you understand why you're making the decisions. So it gives you more conviction to actually do them in a way that could make you money, that could fit into your lifestyle, that's not as active where you have to be in front of your computer all day long, but educated and know what the market's doing, what the complexion is, what stocks are acting best, and give you a new vehicle to educate yourself. And also, so instead of just throwing a fish in your boat, you could actually go fishing yourself, and maybe we hang out on the boat together and we catch a few big ones. But anyway, some of that kind of humor is in this course too, so you might roll your eyes a few times as you're watching it. So all in all, half price. I think it's $897. Go to t3live.com. Click on the icon. It rolls out on Monday. We're really excited about it. We're probably gonna have a total of 10 hours within the next month or two. We just wanted to get you out the first portion of it, and I do think that afterwards you're gonna be a lot happier. And I know that in this economy and right now sounds like a big price tag, but really if you break it down and think about what do you spend money on, this is really to put yourself in a better financial position, I think for the rest of your life, because the market's always going to be here. It's just a matter of how you approach it and how you learn how to deal with it and how you change with it. So with that said, let's go back to Brittany and get a question here.
Giving presents for your birthday, not
Yes.
too bad. All right, let's jump back into the questions. Keep them coming, guys, in the meantime. But we have one from Manax saying, can you explain end of year window dressing? Thanks and happy 40th. Just so you know, it only gets better.
Nice. And we did talk about it as long as you're happy with life, it doesn't really matter what birthday you're going through, but what you want to do is just, last thing on the whole lifestyle thing is just live in the day, but prepare for tomorrow. And that's all I have to say. Take advantage, like just smell the roses and be happy with what's going on around you, and just appreciate what you have and don't look at what other people have. So as far as window dressing, into the quarter, end of the year, typically, what goes on is, what I always say is strong stocks get stronger because people have them in their portfolios, they have them in their funds, and they're performing, and they want to look good, so they want to look like they're owning the best of the best. So people start piling in. Plus, sometimes people don't sell them the end of the quarter or the end of the year, and they wait till the new year, so they want to get them up as high as possible, so they could, window dress and show bigger percentages because that might affect their bonus. So at this particular point, people are talking about quad witching tomorrow, which is the end of the quarter. So that's a strike price game, which is different, which is a different question. But these strong stocks should hold in there, and people want to have them because after the quarter is when people look at their statements, and if someone's not in Apple, not in Google, not in Amazon, not in these high, these high beta names that are acting well, or in your Walmart, your Target, your Costco, your Gap, there's so many stocks that have been active, XOM, that those are the groups of stocks that you're going to want to focus on because strong stocks get stronger. And then when you chase performance, there's also some catch-up plays that people just play to get some kind of beta versus alpha, and that's something that we go over as well moving forward.
Now, G. Dean asks, what oscillator do you use to gauge oversold and overbought?
A lot of people use different oscillators. A lot of people use RSI. We use the McClellan oscillator summation, which it gets measured a few different ways, so don't go looking for it because if you find it, I might have to kill you. No, anyway, I'm just kidding. If people ask me, where'd you get this from? Where'd you get this from? Because on Friday of last week, I was like, we're in the most overbought state of this market, and we're at a plus 60-ish, which we haven't seen all year. So you combine that with the stretch we saw. I put on some cute shorts, and it was a good 3-day trade. So same way in June when we were at the bottom, we were so oversold where it's so hard to be short. You light a match and it could squeeze. You want to use this type of oscillator at extreme points. And now we went from plus 60 to almost neutral within this week's time period where we went from 1474 back down to 1450, 24 handles off the high. Now it'll be interesting to see who wins the tug of war because the shorts finally had a little bit of a break. And the bulls are still in control, and let's just see if they take control, which they did at the 8-day or maybe the 21-day. So right now you're going to see a little push-pull to see if we flag. Let me just go back to the chart of the SPX one more time. So I want to show you one thing that I was talking about today is remember when we did this push through failure here? It took 11 sessions of choppy type stock trading where you could have you could have found a lot of stocks that you could have shorted or went long within this time period, but if you tried to trade the indices, you were frustrated. If you bought tops, you were frustrated. If you tried to short support, you were frustrated till finally we broke out. But this was like 11 sessions. Then you go here, you have a flag. This only took 4 or 5 sessions before we went again. So the question is, what's going to happen this time? As of right now, we're going sideways. We put our short-term top in there. That's when we were plus 60. Now we're at neutral. Question is, can we get back in motion and just continue with another flag type pattern here? Or, do we have to wait for, for some more data, some more time period, maybe for earnings, and go through a time period like this? Because at this point, remember here, this looked like a nice flag. And then it went, broke out, failed, then we need more choppy type action. So at this particular point, do a little less, find what's showing relative strength intraday in order to make some cute cash flow. And also, there's been some money on the short side too, but I think that's the harder trade.
All right, Marketpicker has another retailer-related question for you. A&F holding above prior resistance, now support, and trying to flag. Do you see 39 as the breakout entry?
Okay, well, this one, got battered and bruised, not a leadership stock, but spirited move off the lows like some high-end retailers. So with this type of strategy, if you look here, you will see one, it's had a nice move, and you've seen some commitment. This was the last breakout play right above here, and it is flagging above it, holding higher, hugging the 8-day. So I think, when you look here, 39-ish would be a spot for it to continue, and then you have the 200-day, which should be pretty big resistance that also matches up with this gap area. So if it wants to continue, I think traders are probably eyeing this, and you can get some momentum. So just say you're in tier 1, you add tier 2 as it breaks out, and then as it sells into strength, you get back to tier 1, and that's how you hold a position and trade a position in combined time frames.
All right, we're going to give Red Dog here a break. Everybody tweet him to say happy birthday tomorrow. We're going to take a quick commercial break. We'll be back with Mark Sperling to keep answering your questions live.
Hi, I'm Scott Redler, Chief Strategic Officer for T3 Live, and I would like to invite you to join us on October 6th and 7th in New York City for our first annual T3 Live Active Trader Super Conference. The two-day event will focus on what we believe to be the 5 keys to being a successful trader. We will teach you the strategies, tactics, and mindset we take to the market every single day, and you will leave the Super Conference with a personal step-by-step success blueprint. Visit t3live.com and click on the education tab on the top of the page and watch preview videos of this event. Seats will fill up quickly, so be sure to reserve yours today. My colleagues and I look forward to meeting you. Have a great day.
We're back answering your questions live, this time joined by Mark Sperling. Welcome, Mark.
Hey, how are you?
Good. We have one for you from Green Dog saying, can you go into how you recognize and capitalize on sector rotation?
A lot of times it's experience, but I think one of the keys is your chart work. You have to do your chart work. You know, whether looking at the ETF, which obviously incorporates a bunch of the. Redler, are you stripping there? I'm sorry. I got a little distracted. Part of it is the chart work. Part of it is understanding the stocks in that, and really seeing, are they ready? Are they extended? Have they been basing? And it's just the homework. There's really not an indication on what sector is necessarily going to do it. If you do your homework, you can see sectors that are getting very tight, that have levels of breakouts, and that's really what I do. I just keep going, keep regurgitating these sectors back and forth, finding levels that, finding a few stocks that have broken out of that sector. They needed 2 days of break. I move on to the next one, and so on and so forth. But mostly it's homework. That's homework.
All right, Trend Hopper is asking for you to check the temperature of a couple different sectors here. We can take these one by one, but he's asking for your intermediate take on the oil drillers, refiners, and while we're at it, nat gas. So you want to talk about oil drillers?
The drillers. Give me some specifics.
Well, he doesn't list any names that he's talking about specifically. So if you want to just talk about the sector as a whole, what you're thinking of it right now.
Well, oil in general, I'll just give an overview. Oil in general obviously has come down. You look at the oil ETFs, OAH, which certainly is one of the indicators, not as high price as it used to be, but 4 or 5 days down. I was saying in my morning call this morning, once I get an idea of 4 or 5 days down in a strong market, in a strong tape, understanding it's not really, quite frankly, the leading sector, but it still is a sector that is, quite frankly, at yearly highs, most of them. I look for pullbacks and I look for buy bar opportunities, and either next to the 20-day. In this case, it could have been the 50-day. And that's hence why I was calling out this morning. Exxon was actually trading below its 10-day, and I thought it was actually going to hit its 20-day and never did. And so they've been on my radar, and it was just a matter of whether there was a trade for us. And quite frankly, today I know there were some people who were like, yeah, I see more risk in the oils. Okay. But the key is getting prices. And yesterday I tried it, got it stopped out of some of my things, but with very small size. Today I got a little bit more aggressive early on, and it didn't actually have the trade I wanted it to. Exxon did, maybe a few select others, but APC, PXD, which I was trying to really wait and see, they basically bottomed, but they never had that rally. So maybe tomorrow they have a little bit of a rally, which probably will be an opportunity for me to sell. Obviously, from a longer point of view, that will mean it will resume its uptrend. We'll have to wait and see what happens.
What about a stock like United States Oil, USO? Well, that's one we've talked about on Morning Call before. What do you think about that one right now?
USO, I know, again, three big days down, and today was the third, and it reversed. Now, the only problem with this stock, and I have the daily up right now, is that it is trading below some key moving averages, which I don't like. Let's put up the 60-minute for a second, and it is beginning to trade now above its 50-day. I think this is 50-day, and it's okay. But normally, rule of thumb, if we weren't in a strong tape, I wouldn't be going after it. Because we're in a stronger tape, pullbacks are buyable, and that's most likely where you have to do it. A little sloppy with this chart in general, but It did bounce off, actually. I believe it's 50-day, which is a good sign. And again, I like to buy these stocks on the pullbacks into key moving averages.
All right, Jane's jumping in here on the forum with a couple specific stock questions for you. Let's start with FIG, F-I-G. Wants to know your opinion on this one right
Fortress. Okay. Looks good. Really no complaints here at all. It's sort of, obviously it has had a nice move since early July, $3 to $4.50 percentage-wise, very big move. But looks very it looks like it consolidated over the last few days and looks like it really can make another move back above $4.50. Certainly not a barn burner, but it looks good. Here's the weekly chart. You can see it looks like possibly 5 to 550 is in the cards. When I can't really see a whole lot on the daily, I'd certainly use bigger time frames, try to give me a little bit better indication where my price target should be.
Now, what about DryShips, D-R-Y-S? Jane's asking what you think about this one.
It's my little baby. I made a lot of money in this I think it was 2008, 2007, whatever, way back when. This stock has never gotten back to its old form, but one thing it has done is now it's over its 200-day, and it's starting to live above its 200-day for a better part of a week, which for DryShips is pretty good and pretty healthy. Overall, is it a stock to be in? A stock to certainly trade every day? Absolutely not. But I was talking about it at 210, 215 I was long, and I'm still long it. And you'd have some key moving averages on the weeklies that are starting to show some strength. So ideally, I wouldn't be surprised to see 350 at some point in time by year end. Now, is it going to do it the way everybody wants it? Probably not, but I still think it looks good. I'm still long calls, I'm still long stock. It's a little pet project of mine, so I like it overall. Use tight stops. I would say about 230 as a stop for now.
And P. Dow asks, what do you think of BIDU here? Is a bullish wedge forming?
BIDU. Still in a downtrend, but based on the tape we're in and based on what we're seeing, everybody's like, the chart looks bad, the action is bad, and I can't disagree with you except we're in a strong tape, which means I wouldn't be shorting this opportunity. Now, if we were weak, this would be one I would be looking to short. I think probably it holds 110, and at some point, maybe if you draw the trend line, looks like around 114.50 breaks the downtrend going back a month or so, and I think that will be a trigger buy for a new long back to about 120. So right now, it's probably a buy against 110, but certainly the chart isn't telling you it's ready quite yet. Above 114, 114.50 would be really where I would get a little bit more aggressive.
How about a stock like Monster Beverage, JMCCP, saying, what do you think about MNST?
I actually did my work on it last night, and I forgot my sheet, so I missed it this morning. It looked good. I like the fact that it was, right above its 8-day moving average, and trying to find a little bit of a bottom again in a weak tape, not necessarily the greatest, but in a strong tape, starting to show some composure. Still didn't break a longer-term downtrend, so you're going to get resistance on the way up, and it looks like around 58 is some resistance. Breaks 58 with some authority, you probably have broken a longer-term downtrend, and it probably resumes an uptrend back to 65. Not quite there yet, but the action today on decent volume wasn't bad.
All right, MG5K is asking for your thoughts on Priceline. He says it looked like it was going to 650 a couple days ago, but now down with the market.
So you just got a cheaper price. I try to preach, and I think if you're not understanding what I'm talking about on the virtual trading floor, and you haven't really participated in any of the education classes we have, the swing classes, some of the momentum classes, I think you have to, because I think the key is understanding how we think a little bit is really going to get you in the right position to really take advantage of this tape, because I do believe we're in a bullish tape. I don't believe it's going to stop, certainly until the election, but I think going into the near future, we're going to enter this bull market that's going to be a raging bull market at some point in time, and I'll have the fundamental people disagree with me. Great. The technicals are telling me we're getting there, and you have to understand how I trade. I mean, that's part of it. I mean, how I'm buying on pullback with conviction, where I'm getting involved, what am I thinking, how am I tearing up. So Priceline, I don't know if it's ready quite yet. Do I think, I would say people were talking about it today, anywhere between 530 and 520 is the price. Probably 530 is roughly the price. I just don't think it's ready yet. Needs maybe 1 or 2 more days of digestion, and then you'll see a nice clean pattern. So it is going to be viable on the pullback at some point in time. Just stay tuned to the VTF if you're not, if you want to listen to it, and I'll be watching it.
Great. Okay. And Zima saying, what are your thoughts on AMT and Verizon in the context of the iPhone 5 launch?
AMT. Okay. AMT I don't trade. I haven't traded it. Could get down to 69. I think, it's a little bit slower stock. It's still trading below key moving average. So to me, I would want to wait and see if something actually happens. Verizon. It's on the right side of all the moving averages. To me, that looks a little better, and it looks like around 44.50. Looking for a nice clean buy, using 44 as a stop. Would I chase it up here? I don't really chase right now on this tape. Give a few more days of digestion. You'll get another opportunity. Obviously, if it runs, I'll make a day trade on it if I'm watching it. But I think you'll probably get a little cheaper over the next day or two.
Kickserve asks, Mark, how do you manage almost 45 positions? And what's your advice for newbies versus intermediate traders?
Well, look at my eyes right now. I have such a headache. It's unbelievable. Experience. I guess that's the only thing that I can talk about. When I first started, I traded one position, and it was back and forth. Obviously, it's a long time ago at this point in time. I don't watch tick by tick. I watch levels. I get annoyed when I'm in sloppy stocks that, quite frankly, I don't know my levels on. I don't get annoyed when I'm wrong in my ideas and they're still holding above my levels. So the key is getting an arena of ideas, getting a basket of ideas that you're comfortable with, and getting good risk versus reward scenarios in place. Meaning you get good prices. You fight for your prices all the time. So whenever I'm in all these positions, if you notice, I'm never in. I don't enter and exit 40 positions at one time. I could be working these positions over days, weeks, usually not months, but certainly days and weeks or hours over time. So that's the key. It's still hard in this with the computers and everything. It's very fast. I got to trust my conviction, and that's the key. And I've been doing this long enough that I trust what I'm doing, and as long as things make sense, I'm going to continue doing it.
All right, we have time for one more question from Dan saying, Mark, what do you think of Mastercard today? Still bullish?
Mastercard. The action was bullish. Now, it didn't close the way everybody wanted it to, but it looks like it's a little bit of a descending channel that is bullish in nature. Held its 8-day moving average, which is good. Obviously, we would have loved to see a breakout, not the day for it. As long as it holds above 4, really, I think 450. I think you're in good shape. I think it's with everything else in this tape. I think it's going to make new highs. It's one of the best in breed, certainly on the charts. Good looking chart. Might need a little bit more time digesting up here, but certainly keep it on the radar. All
right, Mark. Thanks for coming and answering some questions for us today. You're a trooper.
I'm tired. Woo. If you're not tired at the end of the day and you're trading, then you're doing something wrong. I'm really convinced of that, especially in this tape.
Well, and on that note, we're going to let Mark go home and take a break. And thanks for everybody that's sending in your questions. Meet us right back here next week. Have a great night.
Bye.